In this video, we'll solve Gibraltar Co recent exam question. I strongly encourage you to pause the video and look at exam question first to get understanding. Questions are attached. So let's go straightly to the requirements so that we can understand what's being asked. As we can see, this question is divided into three parts. In the first part, it is required to prepare statement of profit or loss and other comprehensive income. In the second part, it is required to prepare statements of change in equity. Finally, we need to restate basic EPS. Firstly, create statement of profit or loss and other comprehensive income. So in the first note, it is stated that 350,000 of maintenance service was recognized as revenue. It should be deducted from revenue, and only commission income of 12% should be recognized. This would lead to revenue decreasing by 308,000. In the second note, it is stated that the company made sales at 31st October. However, related cost of sales were not recorded. We simply multiply sales amount by 100% and divide by 130%, as sales amount is 130% of cost of sales. This would lead adjustment for cost of sales of 9,257. In the third note, it is stated that investments through profit or loss were sold at a loss of 3,000. However, necessary adjustment to the carrying amounts to those investments were not made. After making the necessary adjustment and comparing fair value at 31st October with a revised fair value, gain of 8,900 should be recognized in profit or loss. In the fourth note, it is stated that additional investments through OCI were bought. Since cost of those investments were recognized in administrative expenses should be decreased by the same amount, and carrying value of investments through OCI should be increased. If compared to fair value at 31st October with the revised fair value, loss of 3,250 should be recognized in other comprehensive income. In the final note related to these parts of the question, it is required to make adjustments on fair value gains on land and buildings. Total revaluation gain was 424,000. However, deferred tax in the amount of 89,040 should be deducted from this gain, resulting in the net gain of 334,960. Therefore, our statement of profit or loss should change as such. That's it for part A. Now let's move to part B. We need to firstly create pro forma for changes in equity. Then let's make adjustments to for the rights issue. Shares in circulation is 1,800,000. To find the number of new shares, we just need to divide 1,800,000 by 5. Since value of share is $1, total value of new shares is 360,000, including premium of 180,000, as ordinary shares are 50 cents each. In addition to this, dividends declared were recognized in suspend account, which should be corrected, as total number of shares is 2,160,000 and dividend declared is 10 cents each. In total, 216,000 dividend was declared, which should be deducted from retained earnings. After those adjustments, our statement of changes in equity would look like this. That's it for part B. Now let's move on to part C. Part C. The new 5 shares are valued at $1.60. One rights share priced at $1. This gives us theoretical X rights value per share of $1.50. As we know, last year's EPS was 20 cents per share. If we multiply it by theoretical X right value per share and divide by the market price of share, this gives us approximately 19 cents. I hope this video was helpful for you.